Good evening, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is May 30th, 2012. Let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. Let's take a look at what happened today. Today we came down from this update yesterday here. We pretty much negated every gain that we had yesterday, but you notice the candle wasn't as big as yesterday's candle. Also, volume was more than let's see, the past 2 days, but it wasn't necessarily all that great. I mean, when you see a big down day like this, which is only almost 2 points on the SPY, I mean, you want to see much higher volume, something like this. To confirm that the breakdown is in effect. So here we have we're kind of trading in this channel right here, and this is a bearish channel. Eventually we're going to break down, obviously, because we're sloping up. Could we get to this 135.72 level? Yeah, it's possible. I mean, I really wasn't expecting a day like this, but if you notice, this gap fill resistance line here, it just basically gapped down right into this line and then came right into this upper trend line here. After we broke out of this upper trend line, this trend line here, we did not confirm by closing above this candle here. I did say in previous videos that we would have some resistance here at this 20 moving average. We were pretty close, close enough, and then we got this nasty sell-off. I wouldn't be surprised if we get some sort of bounce tomorrow, and that's only basing it off of the fact that the volume has been pretty low. So, to validate this move down today, we would need to have a substantial amount of volume for me to believe that we're going to continue down again tomorrow. However, if we do continue down tomorrow, we close below this bottom trend line here, then I think the downturn is going to probably start. Okay, I'm still in the camp that we could still rally to the 135.72. There's nothing right now on this chart telling me that we can't. Okay, so just keep that in mind. A lot of issues coming out of Europe, but at the same time, we have to trade what the charts are showing us. This is the chart of the US dollar. As you can see, we have this upper trend line here that I said we would have some resistance. We are getting some resistance. Let me kind of zoom back here so I can kind of show you where I'm getting this trend line at. And as you can see here, I'm getting this trend line after this consolidation pattern. This is a pretty big deal, this consolidation pattern here. We could make an argument that the consolidation period could be here. I mean, if we eliminate these tails up here, I mean, let's kind of zoom in here, and we can kind of see, this general vicinity here would have a, pretty big resistance. So what I like to do is I like to be conservative and draw my lines up there, which is probably why we see it so much higher, and it's already pulling back over here. So if we kind of move this line down here to where it's kind of getting a bounce, and then we move our chart all the way back here, we'll see that it's still within this vicinity here. I mean, it's tagging the top of this candle here, tagging these candles all over here. So it would validate a resistance point at the point of where the dollar is pushing down now. Now this down candle, keep in mind, is after hours. This candle here was today's candle. So again, if the dollar goes up, the market goes down, and vice versa. Right now in after hours, we are pulling back on the dollar, which tells me that the E-mini futures are probably trading higher. Just for argument's sake, let's take a look. Alright, so this is a chart of the E-mini futures. This candle here is the after hours candle. As you can see, we are up $1.25. I mean, it's not much, but you can kind of see how it's inverse to the dollar, and it's basically it's obviously not going to be a 1-for-1, but again, if the dollar continues down, kind of giving it a little bit of a pullback because the dollar is overbought, then we are going to see somewhat of a rally in tomorrow's market. Okay. Now this is a chart of the VIX. The VIX is the fear indicator, as we all know, and it's also like the US dollar. It's opposite of what the general markets are. In yesterday's video, I said that we came down here, basically, eliminating the history. You can look at the previous videos if you want, but we came down into this 20 moving average, and I said that we need to watch to see if we break down from this 20 moving average into this 50 moving average. Obviously we did not break down from it, which is good and bad. Bad because I kind of wanted the markets to rally because I had some shorts in play ready to go. However, we did get a bounce off the 20 moving average, and it was a very nice bounce. We actually gapped up and then continued higher. Next target would be this 200 moving average before we come back down. So we may go into it and come back down, but as you can see, like this area here, we didn't even actually tag the 200 moving average. So there is a possibility that we may actually turn down a lot sooner. Now keep in mind the VIX is in an uptrend. We have a high here, and then we have a higher high, we have a low, and then we obviously have a higher low here. So there is a possibility we may break through this 200 moving average. Actually, we may actually get into this 29.35, which is a calculated level, and that's definitely a possibility. If fear, however, gets all the way up here, then we can expect the markets to take a huge dump. That's actually what we are waiting for. Again, just like I was saying in previous videos. I was saying that playing the counter trend is, you're not putting the odds in your favor. I mean, you can still put odds in your favor, but it's a higher risk when you go counter trend. It's kind of like pissing in the wind. It's possible, but more than likely, it's not a very good idea to piss in the wind, right? So the trend is your friend. Right now, the trend is down, so you want to look for short plays. Imagine you went long. I mean, this would have just easily taken you out today, all of your gains of yesterday. So just as a in my opinion, we wouldn't want to go long in this market unless you're in and out as fast as possible. You want to go with the trend, you want to go with the current, you don't want to piss in the wind, and then that's that. You want to conserve your money and take the best trades out there. Don't just take a trade because you want to. Don't just take a trade because you feel like that you need to be in a trade. Take the trade because the indications are telling you that the trade will go in the direction that you expect it to go. Right, this is chart of American Express. This is AXP is a symbol. I believe that this trade, to be honest, in my opinion, is currently void. All right, even if it gets up to this 50, well, it's actually not void. If it actually gets up to this 58.50, then I'll probably still take a short on this AXP. It still looks pretty good in my opinion. This is a chart of Google. I made a doji candle here on low volume. However, we may get a reversal back up there on Google. However, I do have this 571.98 level. Everybody thought it was crazy because it was so low when Google was all the way up here. However, look at Google now. It's just taking a huge dump. 571.98 doesn't look so bad anymore. So let's just wait till it gets there before we take a quick either day trade or a short-term counter trade to the long. This is Alcoa. In yesterday's video, I said, probably get a bounce off this 903 level because it's right into this 20 moving average. Not a bounce, but a pullback, and that's definitely what we had today. However, in general, because when the markets pull back, 90% of the stocks will probably pull back as well. This falls in within that 90% of the stock. So whether or not let's just say today the markets were flat, I still think the Alcoa would probably have pulled back. Again, you want to keep your risk low, so I still wouldn't have taken the trade unless I got to $9.58, which isn't all that far away. Okay. This is the infamous Facebook. Facebook has not reached my $26.18 level yet. However, you can see we did get a bounce intraday. Okay, let's take a look at the intraday. This is the intraday chart for Facebook right here. Right, this line here is the start of the day. We came up all the way up to this level here, which was about 29.55 off of this 28.79 level. 28.79, which was the second level. So we did actually get a bounce. We came down, we actually got another bounce, and then we broke down through it. Okay, so basically on the daily of, I'm still gonna wait for it to hit 26.18 before I even attempt to take a short-term long position on Facebook. And if you think about it too, again, this is going to be a counter trend trade, so it's going to be in and out, whether it be a day trade or a single day trade. 1 or 2 day trade to the long side on Facebook. Okay. All right, if you look at gold's another one. I mean, this is exactly my point. You don't want to chase one. Two, you don't want to do counter trend trades, right? So people who bought here, great. I stopped myself out a little early. People who held just got eaten up, right? So they said, okay, I'll wait for it to go back up. But they wait for it to go back up, and then gold takes it all back again. Now gold is getting another bounce, which tells me that there's a possibility that the markets may get another bounce tomorrow. Now think about it. When gold goes down and the markets are weak, markets will go down with gold, or I should say gold will go down with the market. markets, when gold is inverse to the markets, that's giving me a signal that there's a possibility that the markets may follow gold tomorrow, because gold, not like before in the old days, gold would trade inverse to the markets because the markets, when they get scared, they put all their money in gold. That's not the case anymore, because when we have deflation, gold will go down with the markets. Okay, so I'm still in the camp that if we do hit this 156.32 level, I'll probably take a quick short on gold and see what happens from. So where is everybody putting their money if they're not putting it in gold? Well, take a look at this chart here. This is Apple. This is a chart of Apple. If you can see, Apple went up $6.90. The high of Apple today was actually 579.99. If you think about it, I mean, the markets were getting slammed and Apple is going up. This is not the first time Apple has gone up when the markets get slammed. This is telling me that people feel safe. Their money is safe in Apple. So I'm still in the camp that 603.30 would be my first short on Apple. After that, I mean, if you want to be safe, then you could actually take the trade at these at this double top here. Okay. But patience is key, you know. I mean, you don't want to chase. Markets are going down. You don't want to jump on. If the markets continue down, what you want to wait is for a consolidation period first, or a pullback before you jump in on the short side. Okay. All right. So let me explain real quick. So basically, the markets has gone down. I mean, if let's just say, for example, the markets went down these 2 days, and you're like, oh, the market's going to break down already. I mean, you don't want to chase. You know, once the market starts going down, you don't want to chase. Just like when the markets went up, the market started going up. You don't want to chase. You don't want to jump on the markets, because look what happened the next day, and then it just keeps on falling. I mean, yes, the markets are currently in a short-term uptrend. However, the markets are down. We did not break down from this bottom trend line here. And if you chase, this market might just pop right back up without you noticing. Okay, so what you want to do is wait for pattern. In my opinion, you wait for pattern first. Once you get this sideways consolidation or a possible pullback, right, then you can short it to maximize your profits and minimize your risk. Okay. The biggest thing is never chase. Once the market makes a big move in one direction, then you just gotta wait for the next the next one down. I know previously I talked about Lululemon, and the level was 75.44 or something like that, up around here. Let me just kind of just zoom in. This level over here, this trade, in my opinion, for me at least, is void. It's come close enough to this 618 Fibonacci retracement. It's already pulled back. It's now under the 20 moving average. It's closed under the 20 moving average. Even if this Lululemon goes into this calculated level, this trade is off the table. To me, it's void. It has a strong possibility of breaking through. Okay, we still have a double top here. So if you wanted to take this as a day trade, it would make sense to me. But as a swing trade, no. I mean, this is void in my opinion. So that's all I have for tonight. This was your 7-minute market update. Good luck to you all, and thank you for watching, and we will see you in the next video. Just to let you know, this week will be an exciting week because we have all this data coming out from Europe. We'll also have jobs report coming out on Friday. I mean, it's probably going to be pretty volatile, so don't think automatically that the SPY is just going to come straight down from here. I mean, yes, it is possible, but again, without that volume confirming it over here, without this volume confirming it, I mean, we need volume like this, or even like this. I mean, it didn't even get second to the highest within the previous 2 weeks. Until we can get something substantial like that. So if we drop again tomorrow on high volume, then that would make more sense. But if the volume stays low, I mean, the markets can still go down, but it doesn't validate anything. All it's telling me is that there's more sellers, there's no buyers, and there's no panic. I mean, the VIX is showing a lot of panic, but it's just there's sellers and there's no buyers, and that's the bottom line. Okay, the volume was still low today, and just keep that in mind. All right. Sorry to babble on, but good luck to you all, and thanks for watching. I will see you in the next video.